It's 6:10. You're right up to date. Alex Deakin will have the weather for us in a few minutes' time. But first, the housing market can be complicated at the best of times. But when a bank tells you one thing and another says something completely different, it can be hard to know just exactly what is right.
A study out today from Halifax claims that mortgage payments for new borrowers in proportion to their disposable income are at the lowest for 15 years.
But this is the fifth housing report out in just the last month alone. So what do they all mean? Well, we're joined in the studio by Henry Pryor, who is a property expert. So I guess that is the place to start. It's all terribly confusing, Henry.
It is, Roger. Very, very confusing indeed. We started off last week, last Monday, with the Right Move monthly survey, which is an average of asking prices. They marked asking prices up 2% over the last 12 months from July 2011. Then we had the taxman, HMRC, confirm that the number of houses actually selling was still trundling along on the bottom, with just 74,000 homes sold in July. That's marginally up on 2011, but it's about half what was sold in 2007. And then we're going to see on Wednesday the Land Registry, which is reporting the average average price of houses that are actually sold, is going to confirm that actually house prices for those deals that are actually done fell by 2% over the last 12 months. So it's getting very complicated, and it's sending out very mixed signals both to sellers and to buyers.
So who do you listen to?
Well, inevitably listen to the BBC, Steph, and the BBC will confirm, and those who you talk to will confirm that the market is very, very difficult at the moment. Whilst this report talks about affordability for first-time buyers, understandably with bank base rates at record lows, and with, of course, mortgages now much smaller than they were 5 years ago because people are having to raise more money in order to be able to afford these mortgages. Understandably, they're becoming more affordable, but still the problem is for people actually being able to qualify to be able to borrow the money to buy the houses in the first place. And most people still are finding it very difficult to convince themselves to buy a property today that they think might be cheaper tomorrow.
Looking at the mortgage approval figures, the latest ones we have from the British Banking Association, lowest level for 15 years. Just how difficult is it to get one at the moment?
It's proving incredibly difficult because people are struggling to come up with the qualifications that they need in the salaries and the credit history to qualify for some of the mortgage deals that are being offered. We see the headline rates talked at by people like Santander and the Halifax and Lloyds Banking Group that are offering record fixed rate mortgages at sub 5%, which is terribly encouraging when you look at the headline. The problem is you need a 40% deposit in order to qualify to get that rate, which is all very well if you've got the money, but the vast majority of people trying to get on the housing ladder now that want to are finding it a real struggle to be able to save that kind of deposit.
You mentioned the low interest rate. It's been low for a very long time now. Is that the main factor in this news today, that as a proportion of disposable income for new borrowers, it's at the lowest for a long time? Well,
the Halifax report that spurs this conversation is very good news for people who've already got standard variable rate mortgages because they're paying less than they were proportionally historically. But people, new borrowers, people who are trying to buy a property, trying to get on the housing ladder, are going to find this encouraging news, but they shouldn't be diverted from the fact that still their major obstacle is going to be qualifying for the mortgage loans that banks and lending institutions are keen that they should take up.
It's interesting stuff.
Thanks for your time.
Thanks very much, Henry.